welcome everyone. Today, we're going to be talking about capital raising. And we just like to do some of these webinars. That's just going to be me and George for most parts, just to also talk about our experience, how we got started, and how we've grown, in this capital raising part of the business. Syndication business is like about 5 different businesses in one. So capital raising is just one of it. Acquisition is one, so you can even put underwriting as a separate thing of its own. Asset management is a separate thing. So, but capital raising without money, of course, nothing happens, right? You can't close the deal. I'm going to just introduce myself, and then I'll let George introduce himself, and then continue about his journey, and then I'll talk about mine. So that's how this is going to go. And I'm sure we see some, prime capital there. If you have experience and you like to, say something, there's not a lot of us, so you can put it into the comments, and then we can ask you to unmute yourself, and then you could talk about your experience and things like that. Ask any questions. And so that's it. I'm Dr. Fasanya. For those that doesn't know me before, I'm a pulmonary critical care physician. I'm also a real asset syndicator. I'm focused more on the operating side. However, I also do capital raising by default. I've been in the business for a long time, but into the real asset syndication around 2018. And since then, we've grown super fast. So we have about 1,030 units of multifamily, 6 self-storages, 2 luxury senior living. And we also acquire some other businesses on the side, like electrical company, sign company, and so all those companies that can help us to vertically integrate into this. So, and I used to have a mentor. I still have him as my mentor. So that's how I got started. I'm going to talk more about that later. So I still practice medicine, and currently this January, I finally got the parachute to say, started my own private practice. And so it's been an interesting challenge, a whole different level of learning that I'm doing now. So now I have the real assets, because we don't only do real estate, right? We do oil and gas also, so anything that we feel like it's a real asset. So we do. And then I have my medicine private practice arm of things. I'm having fun, enjoying it. So, yep, give it to you, George.
Okay, so I'm Dr. George Ozoude. I'm an orthopedic surgeon and also a real asset syndicator, focusing more on the investor relations and capital raising side. I have been an orthopedic surgeon for 15 years and then started my journey into real estate and real assets. I've spread my capital into different types of asset classes, and ranging from residential, multifamily, to some farmland, to mineral rights, which is a type of oil and gas type of investment, medical office building, of course, where a lot of us are in medicine, invested in venture capital startups, so businesses as well, running the gamut of all the real tangible assets, things people will always need. And I started that journey in 2016. I had been in employed practice since 2014 and saw the writing on the wall and was seeing where medicine was headed, and I wanted to have some alternate streams of income. So really looked around and settled in on real assets, because I think that, like I said, those will always be in need and they can cash flow very well. Since 2016, I've invested into 25 deals, mostly multifamily, value add, and new development. I got so inspired that I wanted to bring other physicians into this space, because I know they're feeling the same friction. So whoever's interested, I was interested in connecting with them, because I didn't see a lot of physicians in the space as investing as an LP in so many of those deals. And so now I'm doing co-GP, which is helping with other operators like Bio and folks who I've invested with as an investor relations, asset management, boots on the ground if need be, and then of course capital raising, which is a huge part. And so I've done 3 deals since 2021 and counting. and definitely going to have a good time here sharing my story regarding that. I've since transitioned into private practice for the last 2 years, just being able to get passive income streams and from real assets. And now I'm in my own practice. Private practice is a direct cash pay practice. So I'm really having fun now, learning a lot, heavy lifting, bumping my head, but I'm in the right place, I feel. Yeah, I would love to kick it off and just tell folks about how I got into, or my experience with capital raising side. That's not everything we do, which is a great disclaimer to say right out the gate here. You can't just raise capital for these type of deals. It's actually illegal. It's an SEC violation. And so even though we talk about it, it's something that is part of the team, like Bayo said. In addition to doing other things, we raise capital. So I would say I started into this whole foray by starting hosting events in order to educate other physicians and busy professionals. And I think that's a great way to start, is just be a focal point of building a community to educate. Because capital raising is really about educating, getting someone comfortable enough in their knowledge base to make a decision of an investment that will help them in their future. But I didn't exactly know what it was. I just read some books and listened to podcasts and didn't know what it really entailed. I did join a mentorship club, and Bayo's going to contrast that by his actual mentor, single, solo, one-on-one mentor. Whereas me, I joined a mentorship club. They're called the Real Estate Guys Radio. They're based out of Dallas, really good group, and I've learned so much from them. And I actually got my first opportunity to raise capital and be investor relations for a deal through networking in that group, which is, I would suggest, a way for folks to do. If you want to get in on a team, it's best to know who you're working with, and joining a mentoring club is one way to do that. So I bumped my head though. I didn't raise any. I raised a donut, zero, for a deal where we're trying to raise about $800,000. So this was like a $3.5 million deal. And I thought I could do it. I had been doing my meetings, my meetups for a while, for about a year, and I thought I could do it, but it's tough. And what I realized is that I didn't necessarily have a recognition in public as someone who does real estate. I'm recognized as a doctor, as an orthopedic surgeon. And so I learned that lesson. It's, look, you have to have the branding and the positioning as someone who can be a trusted source before you just start to go out there and raise capital. So that was my first raise. I also only had a month to do it, so it was like a shortened time frame, a little rushed. Immediately after we got through the raise, my partner on that deal, he was 20 plus years of experience. He was able to raise everything anyway. So we're in the deal, so that's good. But I took it as a failure, right? Which is okay. We fail forward. But immediately, the week after that deal, our mentoring club hosted their annual sales meeting. And this was the first time I've ever gone to a sales meeting. Another thing I would recommend is some kind of training on this marketing and sales pathway. And that opened my eyes to everything I did wrong on that first raise. It was a 2-day course. And I noticed that I didn't have positioning as a real estate person or personnel. I only talked about the returns of the deal, the nuts and bolts of the deal. I had the short time frame, and all of these kind of, I think, culminated in just not being able to raise capital. And I learned from that course is you can't just talk about the deal. You have to talk about what it means. You have to relay and connect with who's sitting in front of you based on their dreams, their hopes, their aspirations, not just about a figure of a bank account, how much returns they're going to get. And so that was one key takeaway, was really to dive in and learn about who is in front of you. And that reminded me of something. When I took that sales meeting, there were a lot of parallels with being in medicine and being a physician and having a patient in front of you. And this was super key for me because all that time up until that point, I always felt like salesmen and saleswomen are sleazy type of things, just trying to get a deal and get one over on somebody. But that course made me realize that I've been doing sales my whole career is in medicine. I just sell health. And patients come to me as opposed to me having to try to go to them is because I already established brand and positioning. So this was huge. I went through 4 years of medical school, 5 years of residency, 1 year of fellowship, got an MD, got all these certifications, board certified. So I can hang these up on the wall, and this is your branding and positioning. And this is so strong that your sales pathway is made easier. And that clicked in my head is, oh, you can't just raise capital in a month. You actually have to put the work in to gain that branding, that positioning, that trustworthiness over time, that consistency. And it made me realize that I'm already in sales, so it's okay. What am I doing as an MD? I'm trying to help the person in front of me. Same thing I'm doing with my coaching program now, our coaching program. Bayo and I have a coaching program for physicians. And same thing I'm doing with an investor who's sitting in front of me, potential limited partner. I'm trying to help them. And so at the end of the day, I ask myself, am I trying to help this person in front of me? If the answer is yes, then sales is okay. That's really what sales is. So I came to terms with that. I went back to the drawing board, continuing to do the meetups, started incorporating webinars. Bayo and I started doing webinars so to extend the reach, extend the consistency. So constantly having networking events where people can connect, engage, and learn. Again, capital raising is about educating. And so this also helped put me out there and made me visible to more people in the ecosystem. And that actually led to my next 2 raises. I got the opportunity to be investor relations and asset management and raise capital for 2 other deals. And one of those deals was an operator that I invested with as an LP. They were actually my second deal as an LP. So I maintained a relationship with them. I've done speaking events with them. And now it's come back full circle. They offered me opportunity to say, hey, you want to join us on this deal? We need help with asset management. And that turned out to be great because I got to raise. And that was my first triumph because I actually finally got someone to believe in the deal and believe in me, and 250K, right? Just signed right there. And then from that deal, those 2 deals, I was able to raise 500K. Still not a big number, but for me, I'm okay with that. I'm okay with starting somewhere. And that may be many people's story. You only raise 100K or 500K or $1 million, but you start somewhere. And so that was my big triumph, is getting that very first person and it being multiples above the minimum. That felt good as well. The second triumph was getting my family members. A lot of people will start with friends and family members. I was able to get some of my family members to understand the concepts I was trying to educate about and make their first investment with me. And that deal is doing well, 6.5% return over the last year. And it's only going to get better as time goes on and the business plan goes further. So they're making their cash on cash return at 6.5%. So I'm really happy about that. It feels good to get that feedback, that validation. It encourages me more to put myself out there even more, which is a struggle for me. But you have to be comfortable with that. You got to be comfortable with being in the front of the room, not necessarily being the expert, but connecting people to deals, to good operators. 500K is what I've raised, and I'm looking to 10x that this year. We're putting a lot of content out there. That's been my story and my triumph. Bayo has definitely a more extensive history with capital raising. I'm going to kick it to him. But any questions about that? I went through a lot, so I want to just maybe about 5 minutes, just any questions about my story, what I relayed.
I have a quick question. How can we help you get to the level you want to get?
How can you help? And I'm going to think of it in terms of me and then in general of any capital raiser, right? Any investor relations. How can you help? I think I like making the parallels to medicine a lot because there's so many. It's just easy. What's the best way for physicians to get their name out there is to do good work, and therefore their patients are word of mouth, spreading they're essentially becoming their cheerleaders, right? They're supporting them by telling their friends, their neighbors, oh, Dr. Ozoude, Dr. Fasanya did a great job. I would recommend him for this. So I think referrals are huge. And I think One of the things I learned through my mentoring club is there's actually an art to asking for a referral. And so I think that would be my answer to anyone on here is referrals. Come to our events, but real referral. I don't want anyone to feel like they're advocating or vouching for someone they don't know, but we're putting content out there, we're putting events out there, we're putting programs out there. Come to our events, get to learn us to the point where you feel you're comfortable referring us to friends and colleagues in your space, in your network.
Yep, great story. I'm always inspired by your story because because you did the cash pay. I finally got the courage to be like, you know what, not cash pay, but at least private practice. You know, I have better control over my destiny in a way, and also real estate allowed me to do that. Your investor list has grown. Before, during those times, you didn't have a WhatsApp group.
Nope.
Now you have what over how many people there?
About 85, 90 people and growing on the
and then you have an
WhatsApp.
email list now. So you have, so we create a system, and then we just haven't found a good deal here. I'm sure you're going to raise far more because at least your email list has grown significantly. My story is a little bit different, and that's one of the reasons why I like our partnership is because we started from two different kind of strategy, but we met in the middle, and it's working really well. So for me, I don't do really well with mastermind. I tried to join multiple, but I just can't keep up with all the meetings, all the events, traveling. There's so much involved. And if you do mastermind, you have to really be involved. You really should all go to all those Zoom meetings. It's going to be like maybe twice a week. You're going to have to go to that event in Panama, meetup. There's so much meetups. So for me, of course, I'm from Nigeria. I'm so used to just one-on-one apprenticeship style. Just find somebody that you trust. So I actually started doing my own deals at first. I bought my first 8 units like 2018. And after that, of course, those are good times. So the deal was doing so. Eventually, I bought my another one the next year. I was just using my own money. And when I was in fellowship, I've been doing some limited partner deals because I moonlight, and I would put that. Those are the good times when you can invest $15,000, $35,000 minimum. You know, now it's like 100,000. So I was able to invest in few deals, and I had good experience in residency and fellowship. So I started early. So I decided, you know what, I want to be a landlord. So I bought some of my own deals. And then some people asked me, can I do deals with you? And at that time, I didn't even know what I was doing. I didn't know whether I was doing JV or syndication, and everything was on the paper. I was just doing just the money just exchange hands, no documentation, but we got it done. So at that time, I was doing JV without even knowing. I was like, okay, fine. I take 60%, you take 40%. I put half the money, you put half the money, and then I take a little bit just for me running the deal. So then after a while, I was someone that I was investing with. I invested with. I had good experience. Majestic Investment Group. It's not like big like Grant Cardone or real estate guys, but I trust the guy. So I asked him for mentorship, and he told me my entry price is for me to raise money for him. So that was it. So it's like, I'm not going to charge you $40,000, $50,000. You follow me, you see what I'm doing. And I said, this is perfect for me. So for about a year and a half, so I was just raising money for him. So that was my main thing, investor relations, because I also sit on the asset management meetings every week. So first raise, same thing, except that I used to have a blog before. I had a blog called Dr. Breed Easy Finance. And during COVID, I fell off because I'm a critical care physician. So I had to actually do ICU work during COVID. So I stopped blogging, but there are some people that continue to follow me and continue to ask me, email me. I'm like, what's going on? No blog post or anything. So I actually started a WhatsApp group. And then, we just talk about what I'm doing. They want to continue to follow me. So I was able to raise, same thing. It was for self-storage. I think it was for like $1.1 million we're trying to raise. Also a small deal. And I have about $1.5 million that were pledged. And that's one thing you need to learn also, that pledging far different from actual money that exchange hands. Until the money shows up in the bank, don't even count on it, because I was so, I was like, man, I'm going to impress him. My first one, I want to show him that I'm already ready. So, anyways, after all of that, I end up closing about 300K, out of all of that. And of course, like George, of course, he already knew that, right? He knew that I'm probably going to fail on my first one, but he liked my enthusiasm a lot. He said, oh well, sure, let's go. So at that time, I felt like a failure. Same thing, even though when thinking back, that was actually pretty good. But at that time, I was like, man, I have these 200 people on my WhatsApp, and I talk to them, and they all say, yeah, sure, mark me down for 100K. And then at the end of the day, I only raised that. So it just also showed that then we went through. So what I end up doing is going through whenever there's a lead or an investor, I will go on the meeting with him, and then he will go through the steps with him, like connect with, so we review the video, right? After we finish talking to the investor together, it will, go through it like, okay, so what was first thing I did? I connected with them, okay? Also, you research them a little bit before. If you've met them from LinkedIn, look up some few things. They have 3 kids, the same age as your kid. It's a good start. And be like, oh, I'm trying to, create generational wealth for my kids. And, kids are also the same age as my kid. It connects quickly. You have to connect in your first few minutes with the person. If you're both physicians, then connect very quickly. There's always a talk about administration or or the lack of autonomy, pain points. Connect with people. So, and then which is my main issue also. I think it's very common that we just rush to the numbers. So the one that I recorded, I don't even want to, have any record of it at this time. My first few talk, because it was purely the slide deck. Just go, oh look, 20% return. You're gonna make and the thing is, people are investing in, for most part, it's like the car. It's like a car sales, right? People love. They can go anywhere. There's so many capital raisers, but they chose you, right? So you also have to have the track record, obviously, and that to having a mentor is a way to piggyback on the track record. So that's what I did. We were doing the deals together, and then I was able to count that as part of my deal too, because I actually did raise money for the deal, right? And I sit on asset management. Then I did my own deals. So that's what it was. And about 1 year mark, he told me, he said, if you can raise 700K, there's a deal. It was a smaller one, it was 700K. And he said, once you raise all the money in the deal, then you graduate. So for that deal, I finally raised 700K. I, oversubscribed, and then you graduated. If you want to still raise money with me, we can do it together. So since that time, we raised for luxury senior living, raised $4 million. We raised for oil and gas. That was insane because of the W2 tax benefit. Between me and him, we raised like 11 point something million, which I raised like 4 of those. So it's, basically grew very fast from there. And so now we continue to grow our email list. So yeah, that's my story for most part. Mine is just one-on-one mentorship. I like that better. I able to ask him questions. There's no intermediate person. I just play like, hey, Guara, I was looking at this on the right end. What should I look at? And I'm very grateful because I do see people, have to, of course, I didn't get paid for the first one, for the first few raises, which is okay. And it's a price I paid. And for me, it was much easier than to shell 50K. So, yeah. So I'm going to take it back to George and then go through people that we raise money from. Do you have any questions?
I see one in the chat, and I think it's a great question. It's, how does one start raising capital? I think, like with most things, it's good to get around other capital raisers, other investor relations, other operators. Get into the space, go to networking events and see and learn how they move and how they talk and how they connect with everyone, not just investors, with everyone. And then you can do that by tagging on like Bio did, with a mentor, connecting with them, seeing how you can help them and learning from them. You can do it from a mentoring club. So literally our stories. I also think one key important thing is to start raising capital essentially before you need the capital, which is going back to the education piece, is just starting to put yourself out there and being visible, being vulnerable, being willing to just be seen as someone who is trying to help other people. Because Bio just said, raising capital means is they are buying into you as well as the deal, as much as the deal. So they have to know who you are. They have to trust you. They have to know and trust you. And so hosting events, it can be small. I started off with small event. I hosted a game night for every month for about a year, where I invited 5 to 8 people over, and we played a game that was actually financially focused. It's a really cool game. I recommend it if people haven't heard of it. It's called Cash Flow. And
Yeah, you sent one to me as a gift.
yep, yep. And so just getting comfortable with being in the front of the room and just connecting people, educating people is a great way to start. Bio, I don't know if you had anything to add to that. Just how does one start raising capital? I saw loaded questions, many kind of answers to that.
Yeah, I think same way, knowing fully well that it's a learning curve, just like anything else. And the more you do, right, the more you can say, I've done that deal now. So basically, you need to have some track record. So basically, there's only two ways really: have track record or attach to someone that has a track record, and then jump into it. Don't if that's what you really absolutely want to do, then someone is asking what is a mastermind. That was a direct message to me. So mastermind is basically a group, like someone, let's say, Grant Cardone, somebody that is experienced in the field, and then you will start like a group. Oftentimes you have to pay to get into it. It will be like $200 a month, or for George, it was like $5,000 or $10,000. So you pay into it, and then you will be like a group. Sometimes Facebook group, sometimes it's a Slack channel, or some place where you can ask questions and they will answer you, or a group discussion take place, and there will be meetings. And that's where I always feel there's always all the mastermind I tried, always want to do 2 events a month or something like that. And I have 3 kids, wife. So for me, I can't just be traveling all over the place. So it was difficult. But you need to be willing to go to those meet and greets, like meet with people. And then they will teach you things too, right? There will be events for, how to connect with people, how to raise capital, how to underwrite. So you can have mastermind for anything. So basically look online, and then, and somebody's asking what's a good mastermind. I would say Real Estate Guys was great. I went there one time when you were there in Dallas. So, I mean, they were great people. And,
There's also, I don't know them firsthand, but I've heard like good word of mouth again. There's the Raise Masters. I heard about them. They're really good as well. I've heard of Jake and Gino, heard really good things about them. So there's several out there. I took my time before I joined one because I actually didn't ever think I would join one. I always felt like none of them really connected with me, like aligned with me. It felt salesy. I use cars, the negative type of salesy, the upsells. And then luckily I found the real estate guys who were not, they were more about the freedom. I'll put it point blank. They were about the actual foundational freedom that all these investments and syndications and capital raising can bring. So it literally, it goes back to what I was saying. I'm not going to hand over my money until I know there's something deeper, and that's what capital raising is. They were able to raise capital from me because I paid for their mastermind because of their purpose. So they connected with that. Yes, Danny, Raise Masters, Avestor, Fundamentals, a lot of groups out there. There's one that I'm blanking on. You remember the one that Raj was in? I forget the name of that one. It's blanking on. They're Dallas based too. I think multifamily. So yeah, those are some mentoring clubs. You can check them out. We'll leave them in the chat.
Yeah, I hear about Raise Masters a lot. Maybe I'll
Yes.
give it another chance again.
Yep.
But I always fall off halfway through because I'm
Yep.
like, ah,
Raise Masters is really good because they give you the structure that you need to know. They show you how to build your funnel system. They show you how to build your evergreen emails. They tell you where you have to go as far as social media. It's like the complete system there to figure out what you need.
Agreed.
nice, love it.
And that goes back to what Bio said. Literally, it's a business of its own. That's spot on, Danny. It's literally you have to build out an accounting, financial, operations, sales. You're a sales and marketing company.
You have, and then it has you gotta get your SEC docs together, you gotta create your
Legal.
fund. You have to do your K1s at the end of the year, so you need accountants. Yeah, it's got everything there, how to do that.
Awesome.
Nice. Yeah, through my mentor, I was able to get all of these also. I have all the lists. I just use all of his contacts. And over time, you build your own system. And then that also brings us to talking about systems. I was raising before, actually, I had a WhatsApp group only like 250 people. And you won't believe how much how much money we raised from that to list. Like we raised $4 million, from 250 people. It's insane, but it's because they've been with me for a long time, right? Through the, chatting throughout for years on the WhatsApp group. And I wasn't adding much people to it. But eventually, my mentor was like, you need to get out of this. And do you want to expand? And it was actually uncomfortable for me because almost like I know all of them. And it was strange. The first time somebody I met one time talked 30 minutes and wire $500,000. And I'm like, who does that? In my mind, I cannot understand it. But the person told me like they've been seeing my content for a year. They're like, I've been watching you. It's like I've been saying this guy's gonna fall off. He did fall off. This guy keeps doing deals, and I see they look at, and then I talk to people about you. So you've been doing that for a year. So what looks to you like a quick close, it was actually a year of hard work that led to that. But you don't see that. You just see, oh, somebody came in. Oh yeah, I, what deal do you have right now? And then just wire the money the next day. So, but yeah, so you have to basically it's like that thing about raising the money a long time before by just putting yourself out there. And then talking about system, yes, we were doing okay. And then we finally got go high level, right? So I finally got a system in place and everything just went like up. Like that's actually the key. When I finally got my system into place, like Danny said, you have your emails, welcome emails, you have your landing pages, you have things more organized and systematized, and your website, everything. And then you can track your leads also. Once you get the leads, you track them into, okay, did I talk to this person? Yes, we did one-on-one. And then what happened after one-on-one? Did they look interested? Is it self-storage or multifamily? Then you put them, you tag them into each one. So that allows you to go back to your list to get, to see who needs what. And I tag people with big money too. People will be like, I have, 300K. I'm like, oh, say no more. So you tag that person with another big money tag, right? So when you want to do a joint venture, you call these kind of people like, okay, here's a deal. It's only $1 million that we need, but I'm trying to get 3 people, not more than that. And last time we talked, which also helps. So you have to connect again with them to know that you remember what you talk about and you're paying attention. And this is easy, right? Now without the read AI, just go back, read up, what you talk about, make notes, write some notes down, and you have your tags to say, okay, last time we're talking, you orthopedic surgeon and you had 200K. Are you still interested in multifamily, like you said last time? And then we have a good one now. And so that's what I'll say. One of the key is just like any sales, to be honest, just learn sales, have good system, and be genuine also. Most of what people tells me the most, and because I always ask them personal feedback, that what is it? What push you over the edge to invest with me? Oftentimes, I'm gonna say 90% of the time, they say you sound genuine, and they don't even talk about skills. which is funny. I'm like, what about, I like you to say I'm a very great operator. But, when they say, oh, you sound genuine, you sound real, and you didn't push it too high. There's also an art to sales that you don't have to, you have to push, but not email every day. Anyways, I'll leave it to George to answer those two questions from Shola. Let's see.
Before that, actually, I will go back. What is the downside of single-handedly raising a capital, especially if capital is needed is a relatively small amount? Not sure if I fully understand it, because I can interpret that question as, say you have a small deal and you don't need to like raise a lot of money. It's still okay. I haven't done it, but you can literally have a capital partner and then you're the operating partner for a single family home. People do that. That's a model. One person just has all the skills, the hustle, the time, and they just raise the capital from someone who wants to do a private money lending. So that's one idea. I haven't single-handedly raised capital. So in general, I think if you have a bigger deal where you need to talk to more investors, the downside would be if you're wearing all the hats, and Bio probably can speak to that. And the bigger the deal, the more sense it makes to get a team and someone who can just focus on acquisitions, or someone who's great at underwriting. And that way you split the task, or else you're doing everything and it's hard to always be raising capital. I've definitely heard that from other operators who've graduated into doing syndications. It's when they were doing the smaller deals by themselves, they had to do everything, they had to wear all the hats. I think that's one downside to raising capital by yourself on a big deal.
Yeah, just to contrast and also add to that is, I actually don't see a downside if you say relatively small. If you're saying relatively small is raising like below $1 million, yeah, if you can, absolutely, if you're an operator and you can raise all your money yourself, raise all the money yourself. So, why split the pot when you can raise the money by yourself? However, if the deal is big, you can split, part of it with other people to get more expertise and also to decrease your workload, right? Yes, when I was trying to do everything, in the beginning for the joint venture deals and my personal deal, I would find the deal, underwrite the deal, and then go all the way to closing, then manage it with property manager. It was a lot of work. I actually spent more time spent on the 8 units than I spent on 376 units. So just because you have a team of trusted individuals that are constantly doing things, and you meet with them every week, unless something's on fire. But other than that, you spend 1 hour on asset management meeting where everything is well organized for you. And you go over like a list of things, and then you change the direction slightly for the next week. So that's, much easier with a team. It's a team game, as a general rule. But if it's a small deal and you can do it, absolutely, and you can do joint venture too. If I can raise the money from one person, I will, rather than 30 people, because that's less, if your closing rate is 30%, right? That means you have to get, a lot of people to talk to, right? So you have 3 times the people. You're going to have to talk to 120 people to raise 40 people to give you the capital. So that's it on my side.
Okay, so Shola asked, how do you set up your company structure if you're planning on raising funds? Obviously, you'll want to chat with an attorney because I think there's multiple different ways you can do it. The way I'm doing it is, and this could change, will likely change over time, but the way I'm doing it is I have an LLC that I am using to invest as a co-GP. That's where my co-GP shares are going to be located. But then I'm also investing as an LP. So that's one thing. I always invest as an LP as well. So I have LP shares, GP shares, same LLC. I'm still investing with the GP LLC. So my LLC invests into the GP LLC as well as the LP LLC. It's two separate things. And so I think that this contrasts from the fund models where you can create that entity, LLC, where you literally raise all the money from your network and then bring one check to the LP stack or the GP stack. Whereas for me, I'm currently doing it as my LPs, the network that I'm raising from is just bringing their individual checks themselves into the main GP operator's entity of LPs. So there's a couple of different ways you can do it. It's pros and cons to both. I think mine will change over time. I'm going to get to the point where I'm just bringing one check. And then, like Danny said, now I'm the one that's going to be doing the K1s, the reporting, because I'm going to get the report from the GP team, and then I'm going to distribute my report to my investors. So different structures, different pros and cons for them. Anything on your end, Bio?
Yeah, the first part, it's very tricky. So you just have to know, your wordings and how you interact. So with me and George is visibly part of the people visibly part of the organization, right? So that it's not unreasonable if you raise money, for Dr. BDZ Capital. Also for the real asset guys, he's been with them for years. He's been going to events together, talking, giving talks. It's also very conceivable for him to be able to do that. What you have to just avoid is it is very common for operators to suddenly reach out to you. Like that's what happened to you, your first one, George. Like 1 month. They'll be like, hey, raise this capital quickly. The truth is that's actually the legal part. You can't just come unless you have the license, right? You can also do that. That's another pathway. Is a broker license. You have to have some form of license to be able to raise. If you have that license, you can just raise capital. That's it. But you can't just say, I want to raise capital. So just don't fall into the trap. Make sure you talk to your lawyer. Make sure you do more than just capital raise. Don't say, oh, okay, fine, here's 10 people raise.
And they're compensated for that in proportion to the amount you raise. Yeah.
Yes. So there's those words there. They're compensated for 500K. You have to agree beforehand. So if you want to talk more about this, obviously this is something we can talk about. But yeah, fund of fund model also has its own a lot of reporting requirements, and you have to pay. And now you're a fund manager now.
One of the referrals that Danny put up there, Avestor. I don't know about fundamentals, Danny, but Avestor kind of helps with this. Yes. This creating a compliant structure so that you can raise like a fund of funds model. So
we talked to them, and they're one of the good ones so far. And then someone said, how else did you entice your mentor to make him welcome you into his cycle? I'm going to start. So you have to offer value, right? For me, I think that's what he told me, that he saw my enthusiasm in general. He saw that I was doing some of these deals myself already. And also I have a network of physicians I already have from my blogging. So I already have some form of following. So to him, it felt like after we talked, we asked about all those things. I'm like, okay, you're good candidates. And also I offer value to him. I mean, I'll raise for you, I'll help you with your next deal. All I just ask is show me from the beginning to the end. Send you the letter of intent, get it back, go write the offer letter, sign the contract, underwriting the deal, talking to the investors, the emails. So I went through the whole process. So yeah, you have to offer something of value. That's the best way for anything in life. If you have someone that is, I don't want to say higher than you, but have what you want, offer something valuable to say, either your time, money, something has to, be offered. That's what I'll say. Or they have to see something, because, for example, they're busy, right? If you know someone like all those other raise masters, you just pay once and for all, right? You don't need to be enticed. You don't need to entice them. Just pay for the coaching course and the mastermind, and then get the mentorship.
I would add to that, it's kind of cliche, but just keep showing up. If you have these mentors, they're likely going to be hosting events because that's part of their branding and positioning. They're probably going to have meetups. They're probably going to have webinars. Keep showing up. And that commitment, that show of commitment is what I think helped me. Not only showing the consistency that I keep on coming to their events, asking questions, generating conversation and showing interest, but also going the next step in actually hosting events and document it. Show the social proof, like you are serious, like you're consistent and serious. So whenever I would host events, I'm putting it on social media. Whenever I'm affiliated with somebody who's also very highly respected and regarded in the space, I'm putting it on social media. This is how you entice. You show somebody you're very interested and serious and committed, you'll entice them. And then for sure, Bio said, tap into your network. Obviously, being a doctor, this is a good network, but whatever network you're in, engineer, IT, dentist, tap into that, find an avatar to speak to, and show that you're speaking to them. A lot of our marketing and branding is, look, we're trying to help physicians. The operator sees that. Operator or mentor, future potential partner sees that you're talking to physicians and you're consistently talking to physicians, trying to get them on board. They're going to notice this and you'll get invitations. It started for me. They invited me to come talk at their event, speak from your standpoint. What have you learned? And now we're building that rapport. Now I've given them value by coming to their event, speaking at it. You know what I mean? So be consistent. Just keep showing up. Show them that you're there and committed.
Let's see if there's more questions because we're almost done. Somebody say LPGP. Thank you, Danny, for answering that question. Yeah, sometimes we just assume LP is limited partner and GP is general partner. So limited partner invests passively, usually in a deal, and general partner are people that brought the deal together, right? So for us, all of our GP include acquisition manager, like somebody, actually a commercial broker that brings the deal is part of the GP. The capital raisers are part of the GP. Me, the operator, part of the GP. And there are some people that bring big capital that want to be part of the GP too, personal, like money. Like there are people that I'm going to bring 1 million myself, but I want a GP, I want to be part of it. So you have to just negotiate. I'm like, this is me talking to another 20 people. So good. What else? I would like to talk about it. Yeah, someone said last year, lots of Sunbelt area, multifamily markets are very challenging, big gaps between seller and buyer. I think that's everywhere, most places. It's last year we did two major deals, one in April and one in December. Our plan was to do deals every quarter, but you can't just find that deal. So we send LOI 1 or 2 every single week. Now sending LOI to me is almost like I'm not even thinking they're gonna get back anymore. Like it's almost so. Last year was so disappointing. Like you send 20 LOIs and one, finally say something and then eventually didn't work out because of the gap. And sometimes it's so far that you don't even bother. So I learn now because I see a deal, they will be like $12 million. By the time you do your underwriting, it's 8 million. So you're so far, that it's probably not even worth it. But we used to just throw it, see what happens. So just throw the LOI for 8 million and see what happens. And often that they ignore you or say no thanks. And then the same deal will come back on the market like 6 months later, at 10 million, still not at the $8 million. So anyway, so yes, it's still difficult to get deals, but there are deals out there. If you keep writing, remember the 100 to 10 to 1, right? You're gonna go through 100 deals, and then and 10 you're gonna look seriously, and 1 you're gonna finally close on. And some people will put 3 in between. So you never do deals through multifamily listing. I will not say never. Someone said, do you get deals through multifamily listing? So
on market,
at a higher level, it's usually off market.
Yep.
So that's what I'll say. By the time deals on the market, there's at least multiple operators have seen it. So, in my market, every deals go through us. So we'll see it. Whether it's our size bigger than us, we'll see it before it goes on the market. So what that means is we already said no to the deal. And we already underwrote it and it doesn't work. So if you see any deal on the market and you pay the full price for it, you're probably getting a bad deal. And that's just based on the fact that multiple people have seen it and said no and passed on it. So that's all. So how to get best deals? The last question, the last one. So you have to work with a lot of commercial brokers. And after they know that you can close and you are good for it, they will start sending you good deals. So we didn't start getting the best deal in the beginning. They sent me bottom of the barrel, right? And I was like, man, where is all the good deals? Why are you sending me this one that I have to, you know, so far away? But after a while, you also know which ones send you good deals, that when they send it, there's little work to be done, right? There are some that when I see the deal, I'm very excited because I'm like, wow, this guy got me 2 deals before. So keep track of people that are sending you good deals. And when somebody sends you a very bad deal, you underwrite it, it's so far off, tell them, like, why do you send me a deal that is 50% off? So anyway, so you have to make connections. Judge, anything to add, and then you can close.
Before we close, there's actually another question a little bit above. Albert asks, for underwriting deals, looking at exit cap rate assumptions, would you assume the exit cap is greater, higher than the entry cap, or is it equal to the entry cap, or is it less than the entry cap? And I would say to this, it depends on you as an operator, how you're, or as an investor, as an LP, how you're conservative you are. Probably the best thing to do is be more conservative on your underwriting, because you want the deal to still make sense if things don't go exactly the way you want. So if you're exiting at a higher cap rate than you intended, does the deal still work, right? And so you want to feel good about that. Same thing with the other assumptions. If you don't get the market Brent bumps, if you get 2% instead of 7 or 8%, does this deal still work and at returns that you're happy with? Under promise and over deliver is the buzz term.
Yeah, true. So what we do is sensitivity analysis, right? So you do the underwriting, and then let's say you buy it at 6 cap. If you're going to put a value add to it, of course you're going to improve the value. So you could do a sensitivity analysis and say, okay, if we sell it at 6 cap, this is what the return is going to be. If we sell it at 5, this is what's going to be. If we sell at 7, this is what we get. If we sell at 8, this is what we get. So that the investors can actually make their own decision based on it. Okay, let's say bad scenario, we got 8 cap, like 2 above, which is, you know, it will be tough. It might be down to like 13% IRR, like so return at that point, but it still looks like you're going to get your money back. So it's still probably a good deal anyways. Yeah, so that's what I'll do. I do sensitivity analysis. You want to do different types.
So question from James, what are your preferred emerging markets? I think this is a great macro question. First thing we look at is job growth, economic activity. Where are the jobs going? Because everything trickles down from that. So this is a general answer, but we can get specific. But job growth will lead to migration, right? In migration and population growth will lead to rent growth, will lead to happy investors, and it'll lead to community growth. And this all trickles down. Where is crime low? Where are schools good? Where are laws friendly? This is going to be Sunbelt. But I think there's others outside of the Sunbelt. And I think we all maybe reflexively think Sunbelt, but yes, Texas, Florida, Arizona, the coastal Carolinas, Georgia. But outside of the Sunbelt, there's some good Idaho, Utah. These are some good places as well. And Indiana, surprisingly, is a very popular place for multifamily. And Nashville, Tennessee, super. And probably still Sunbelt, but yeah. So macro, look at the macro. Yep. You're in Tampa,
Yeah.
It's huge. We were down there a year ago looking at investment properties, both of us.
We almost closed a deal there.
Yep.
I love it. But I'm looking for every excuse to either buy a home in Tampa or have a deal there so I can go there. but we tried twice, and
The
market.
Tampa Central Florida market is very tough right now. Insurance stupid high.
Oh yeah,
Not right.
that's yeah. The underwriting was tough, and yeah, over there at the St. Petersburg, right? So they passed a new zoning law in over there where you can all the single family homes can be converted 1 acre for 30 units. So that was the opportunity to buy a single family home and convert it into high rise, right? So everybody was rushing into that, and we would try to do that, but it didn't work out. But that's something that will definitely give you good value, though. You know, just buy two houses close together, build a good, nice units on it, and increase the value. So yeah, we're gonna respect everybody's time, and we're gonna close and meet us next week, right? It's
Yep.
supposed to be every 2 weeks, but
We did an extra one just for you guys.
right. Take care. Next week. See you guys.
Thank you guys. Have a good night.
Bye.